understand it, but how the fuck you taking my portfolio for granted? And she said to me, why you never have sex with me? Cause I'm too busy showing you all my NFTs. Hold up, how do you expect me to feed you? Got plenty of Ethereum, Shiba and Inu. She said I felt like it's time for a job, I'm good. I got one, baby, it's called Robin Hood. I know the market like the back of my hand, but baby girl, can I borrow $1,000?
I don't care about your crypto, boy. I'm not even wanting Bitcoin. CEO be an app. I got nothing left to give back to
You're on the talk, hey.
boy.
You always seem to find a way to tear things down, but this Ethereum is gonna get me out this town. You seen these dips yet? We could be so rich, but I won't take it to the moon if you don't wanna come with. I need that fast life, you making mixtapes, so please enlighten me how I'm so damn delusional, babe. You're a musician, you work at Arby's, that's why I hate when you say
I don't care about your
Want to know where to invest?
All right. Welcome everyone to today's episode of Market Capping with myself, DCF, and Small Cap Science. Just before we get started, we're going to roll the intro, and then I will put us up on the screen. So, intro, let's play it.
GM Anon, welcome to today's episode of Market Capping. Before we begin, I just wanted to remind you that I'm not your mom, and nor are any of the speakers on this show. Nothing you hear today is financial advice. You should be a big kid now. Make your own decisions, do your own research, and assume every crypto coin you buy will result in complete losses. If you ever plan on holding anyone other than yourself responsible for your choices, please navigate to the top of your browser window where you'll find the friendly red close button. And now, let the episode begin.
Boom. All right, intro played. What's up, Small Cap? Can you hear me? Whoa. Hello, sir.
I think so.
Yeah,
I think we're
all right.
good.
We're good. Yeah, I can hear you. Let's get rolling. So we have everyone on stream now. A bunch of people are watching. Yeah, let's kickstart it. Let's kickstart things. You want to go first?
Sure. First off, let me know how my mic sounds this time, like in chat. I wore headphones last time, thinking it would help with the actual like mouthing of the voice. So I'm went back to my professional mic. So can 3000x my portfolio can also afford a mic, but can't really set it up correctly. So we'll see how it goes. But looking forward to this one, honestly. I think we got lots of good feedback based off of our last show with Sam from Frax. I think dropped a ton of alpha there, but kept the discussion mainly around Frax and like Frax shares. And honestly, tons of alpha was dropped there, like way more than I was actually expecting. So I think that went extremely well, but wanted to get an alpha chat where we kind of talk through some of our positions, like what the market actually looks like, some of the plays and like, I guess, key indicators that like we're keeping our eyes on. So it's where we'll keep today's discussion. I know it was a little bit, I would say, off the cuff or a bit of a surprise episode. Not much notice there, but actually looking forward to it. Like tons of good content to cover here.
Yeah, and as always, we'll have a recording, so people that miss out on the live version, you can watch it later.
Oh, 100%.
Sweet.
But so what do you think about the market? Like as a whole, like what are where's your head at when you're looking at some charts and just overarching crypto?
Yeah, so for me, I've never been a charter. So for me, it's kind of like I never trade like, oh, we're seeing resistance or support or any of that kind of stuff. I'm more of a trader that looks for like when things are oversold, I tend to just accumulate and wait. And then when things are feeling frothy, I tend to just sell and wait. And that's really it. For me, my stance today is, or like where we are in the market right now is like I see stocks selling off like crazy. Like even today, like I looked at a lot of the stocks that I usually watch, like tech stuff, and everything's down like 6-7%. But you have like Ethereum still holding pretty strong, right? So I don't know if that means like decorrelation or things like that. But what I think it does say is that this like merge narrative is strong. The testnet merge didn't send us, which was a little surprising because it kind of proves that hey, look, the merge will work, and they're doing test merges all the time. There's a few more testnet merges and then the actual one, but people say this is like, changing the wings of an airplane midair. And if they're able to do the tests well, then hopefully the real one works just as well too. Yeah, I think that's kind of where I am. Am I buying ETH right now? No, because I have like a massive stack. Well, not a massive stack, but I have like a good stack already that I just kind of sit on forever. It sits in cold storage. I don't really trade it. Bought it a long time ago, and I kind of just wait on it. But like, do I still think ETH has upside? And over the next 5 years, is it going to be one of the best investments? I still do think so. And I think after the merge, kind of what happens is you get ETH issuance way down, and holders of ETH that are running nodes or using services like staked ETH or whatever, which we'll talk about later, get a lot of the fees, right? And I think like estimates right now are like 10 to 15% at current ETH prices on your money paid in not even new issued ETH, but like fees from other people's ETH. So it's a very like healthy place. Revenues are healthy. I think getting 10 to 15% a year is probably high, right? If it's regular fees. So does ETH go up from here? Hopefully. I wouldn't be selling here, but I'm not saying like, oh, I'm going all in or anything like that either. Where I'm focused is still on things that I think have just been sold way too hard. So a couple of those things we can share today, like I'll walk you through how I think about it, but like Wonderland or Rome or Temple or even like things like Spice DAO. I've just been accumulating those things that are like, okay, this is like obviously sold too much, and there should be like a 2 to 3x here, even if markets don't recover. Like if ETH doesn't suddenly double, I'm looking for trades that will still double, and that's where I'm allocating.
Yeah, I mean that's completely fair. I think you're definitely playing with bigger stacks than I am. But I actually sold most of my ETH position.
Damn, let's go.
I'm pretty super bearish at the moment. I mean, I know the merge is right around the corner. But every time I look at like a ETH Bitcoin chart or Bitcoin dominance, pretty much everything that I'm tracking, I just feel super bearish on like where we're going here over the next like month or so. So, I mean, the merge is something that I'm definitely staying on top of. I mean, I did a ton of ST ETH research today. But even with that, like I'm not super technical. So some of the testnet stuff, I think like I'm watching, but like a lot of it doesn't mean a lot to me. Like when I'm going through and like looking at difficulties and stuff like that, like to me that's just like, hey, I understand ETH's going to get a lot more expensive when it comes to like actual transaction costs and other pieces like that. But like I'm not diving into the actual tech. I'm more of a finance guy. But
right.
I mean, I think like that's probably one of the biggest catalysts, like longer term catalysts that we have in the market though. Is really the merge. But I think there's so much like skepticism around like, I mean, all of the STE stuff I was looking at today, it actually just has me pretty terrified. I was sharing in one of my alpha groups like every kind of thread that I was pulling on like for STETH and like what the peg looked like. It has me just like super concerned. I mean,
okay, let's talk about that. What's the peg at now, or like what are you thinking about for it?
It's like it's about 3% off, I believe.
Okay, I can bring up Curve.
Yeah. So if you actually wanted to share my window for it, I have I have some of this up.
I'll bring your screen up.
There you go. If you can.
There you
have
go.
to let me know when it's up because we're a little delayed. Good stuff. So this is like Curve, like the actual Curve pool. So it's heavily overweight one direction. Like it's actually 72% of the pool is actually STETH, and so there's only about 250k ETH left in that pool. So right now, I mean, you're off peg by 4%, I believe.
So let's say I'm buying 100. Let's say I'm putting in 100 ETH. How much STETH do I get?
Well, most people are going the other direction, so that's the issue. So right now, if you put 100 ETH in, you're getting 102.7 back.
Okay, so I'm getting 2.7% more ETH when the merge happens, right?
Exactly. So, like, for example, though, like Alameda actually just sold, like in the last 24 hours, about 50k ETH, and they took about a 3% slippage hit on that. Damn. I mean, that's like a massive red flag. Like, why are they running to the doors? Like, I mean, they're not normally late much, and like they're normally have like a canary in a coal mine type deal. So like I started like doing some research into that of like, hey, what exactly does it look like, and why is that happening?
Wait, pause. So Alameda sold 50,000 STETH for ETH today. like earlier today?
Yes, like
Yeah.
within the last like 24 hours. So, I can actually probably pull up Alameda ST ETH. So like they took a massive hit on it too. I want to say massive, but a few percent.
And did they
Which
say why?
is they didn't come out and say, like, at least I didn't see like why they did. Like, here you go. Like, this is one of the tweets that is a good example of it. If you guys can see this, over the course of what, this was 2 hours, they sold about 50,000 STE. So that pull is getting wiped out quick. Like, that's like actual curve pull. But like the reason that's like a big deal, at least in my opinion, is like I started looking at like, all right, like if that isn't liquid, like what happens? Like that's really the biggest liquidity pool for STETH. There's like I think 5 million in Uniswap, and then other than that, you just have like spot on FTX. But I think it handles like 11 million in volume a day.
Okay.
But like if you take a look into like Aave, I saw some people were trying to like really lever up their ETH positions. I'm not like connected here. Yeah, this isn't my main window either. But to show, like, to give an example, there's about 2.5 billion of STETH that's being borrowed against here on Aave, which is a ridiculous amount. So like what happens if STETH starts losing, like PEG goes to maybe 50% of PEG, and they start liquidating all these positions. So I'm like, all right, who owns all that debt? Like this is me going down a rabbit hole, but like when you start to look at who owns that debt, it's really Celsius Network. Like they are the biggest holder of it.
Of STETH in Aave, or just holders of STETH in
both.
general?
So I started looking, like that's how I found the connection. But so Celsius, they have about 450K STETH, so they can't even liquidate their whole position. But they're running into a big issue where people are trying to do redemptions on their like Celsius positions, especially after the Luna debacle.
Oh, right.
And they can't liquidate quick enough. So they're extremely illiquid and being forced to sell all this STE.
Yeah.
So there's a race to the door right now, and it's sketching me out at least. So there's a few really good accounts who did some research here. This Dirty Bubble guy is all over it. Dirty Bubble Media, like Mike Bergersberg. There is another one that I had up. See if I can find his tweet. This guy, Otaru, like also a great account who's diving into this like super deep. I always love these like small little anon accounts with like 1,000 followers who do these massive in-depth threads, because candidly, they're normally big names in DeFi who just don't want to post some of this stuff from their public accounts, at least in my opinion. Like you can find some very good stuff. Like, I mean, if you're Sam, like, or SBF, and you want to post something and like get a narrative out there, you're not going to do it from your main account. You're going to a small little like
you think it might be one of them.
There's some of these have like, I'll try and highlight some of these over the course of the next like few months. But like when I find stuff like this, like it's normally like, in my opinion, some big name accounts. But
so like here's how I think about it. Like, okay, so what you're saying is Celsius is probably going to become a seller of STETH. So why FTX is selling, I have no idea, but it might be to front run something like that. Because if the peg of STETH is going to go off, then you're right. You get a bunch of Aave liquidations. I think the reason people borrow against it on Aave is because people believed it was non-liquidatable, right? Like what you can do is you can buy STETH, you can put it up as collateral, then you can borrow ETH against it. And STETH should always be either just as value as ETH, or maybe just a few percent below, so people know they can't get liquidated. So then that way they get staked ETH, and then they borrow ETH, so they get staked ETH and they get regular ETH while keeping all their ETH exposure, which is really cool because the staked ETH is like rebasing, right? So they're getting free validator rewards, but then also getting the ability to use ETH. And I think that's why so much STETH ended up in Aave. So now, if this Celsius stuff does happen and they have to sell a bunch of positions, because you're right, they are getting unreasonable amount of redemptions happening right now, then you see the peg go down. But we saw other people defend the peg, right? Like, how low does the peg really go? Last time the peg started dropping, I think 3AC at like 95 cents per dollar, or 0.95 ETH per STETH, bought a shit ton. I know I would like just swap my entire ETH stack for STETH at like, if we got 0.8, I feel like that's a blessing, you know? anyone who's holding ETH right now probably believes the merge is going to work. Otherwise, like, why are you holding ETH? So if you believe the merge is going to work and your ETH is going to unlock after the merge, like, I don't know, why not hold STETH unless you want to trade just like into the merge pump or something along those lines. And if you're already getting like a 20% discount, you just instantly get 20% more ETH by swapping ETH to STETH. So I feel like there will naturally be buyers, even if the curve pool does go offset. Like, how low can it really go?
Well, I mean, so that's what I started looking into. And I mean, I'm like, I was in the same boat. I'm like, all right, well, how bad is it? So I was like, well, why do they really need collateral? Or like, why does Celsius need the money? And you start looking into it and you realize they had probably the worst year I can imagine. Like, I started looking into it, and so they lost $70 million in stake count at the beginning of 2021. They lost $50 million in Badger DAO, and then they just lost $500 million in Luna.
Wow.
So they took $620 million in losses just off of hacks and Luna combined. And like some of that's starting to hit the balance sheet, and like they're not able to redeem because the biggest piece of their positions is all in STE.
Wow.
So like they're in a very tough spot. So like I started looking into it, and their wallets are public, and actually the one wallet that they have the largest positions in is actually one of the same ones that caused the depegging of Luna UST. There's like 7 wallets of whales that started selling off to do it, and it's one of the same wallets. I need to.
But I just don't think you can. You can't really compare it to Luna UST though. Like, well, obviously you know that, but for listeners, you can't really compare it to Luna UST because what happens is, when UST depegs, what happens is Luna gets minted and then Luna gets dumped. So what backed to UST was just the amount of liquidity for Luna. But what backs STETH is the ETH, right? Like at the end of the day, if you think the merge is happening, the STETH is literally redeemable for real ETH, no matter what, as long as the merge happens. So as long as you're willing to wait, I think buyers will show up, and smart buyers with tons of money that just are sitting around in ETH can swap to STETH and then redeem X months from now. So you just have to price in like, how long am I willing to hold this ETH for before I can redeem the STETH for real ETH? Or even, do I think other people will come along and buy this thing back to peg at some point? And that's where I think I will start bidding, and I don't know, others can start bidding where they want. But I don't think it's like UST where like you get 10 cents per dollar or per one UST. It's in my mind, it's like impossible. It's a lot more like USDT. Remember when there was like the USDT depeg for like a couple of seconds? I just want like 10x long USDT, and then like it's redeemable, so arbitrage just brings it back.
Yeah. So I mean, you're exactly right. Like these are backed by full ETH. But like I think the problem is like that you're having Celsius who needs out. You're having like someone like Almeida start dumping their stack.
Yeah.
As soon as this like ratio on I didn't mean to close that out. This ratio gets too deep on curve. This depegs fast. Like this is only a few percent off because of their A factor and the TVL in here. But like if this gets to like, I want to say like maybe 85%, 15%, this like a big sell of like one like yesterday where you offload 50K as ETH, like it loses peg by like 10 to 20%. Yeah. So like there's a certain point where it holds peg, and then as soon as you lose this ratio, it goes south quick. So those scaling liquidations, like I don't even know what that would look like personally. Yeah. It's because like these, like it's not liquid enough. So if like Aave takes $2.5 billion,
it might be unliquidatable. I see what you're saying.
That's what I mean. Yeah. So like it's like but when you look into it, so this is where I got to that I started to get a little bit worried. So I was like, all right, so there's $2.5 billion being supplied by Aave.
And how much is borrowed against it?
Well, here's the Celsius wallet. Look how much debt they have in Aave.
So 800 million?
824 million of stables that they're already borrowing against their positions.
Oh, and it's against STEs. I see. Oh, so they're not even borrowing ETH against the STEs. They're borrowing stables against the STEs. But that's repayable, right? Like they can easily. Well, where are those stables deposited? So I feel like if they had forced liquidations, like for example, if they had STETH and they borrowed ETH and then they sold that ETH to repay people's redemptions in Celsius, then they wouldn't be able to repay, and then they're forced to be liquidated. But if they have all this like stables liquid, they can just pay it off and not get liquidated, hopefully.
hopefully. That's the problem is they're being like the redemption rates came out. I want to say like flood warning on this because I don't know where I got the source, but it was like 50K a week was being 50K ETH a week were being redeemed from Celsius. So like they were having to come up with those funds.
Oh yeah.
So like there isn't much liquidity left on this STETH. They've already borrowed a ton against it. And like as soon as this becomes too far off balance, like they are in a big liquidity crisis. So I think like what comes of that is like, hey, we hope we don't get to that point, but I think Alameda running for the door is a big piece of it. And the other one I ended up finding out, I have never heard of this platform before, but it's called Swissborg. You ever heard of Swissborg?
No, I'd never heard of it.
No,
But they have a bunch too.
Either. Yeah, so they're in a similar boat. They have 80K STETH worth like 150 million.
Are they forced
like,
sellers though?
both
Like, do they have to get out of STETH? Like, is there a bunch of redemptions coming or something like that?
So, I mean, pretty much all of their position was STETH, so they're in a very similar boat. So the thing is, if they try and run for the exit as well because they think, hey, like there's going to be a peg crash, like you also like perfect.
The only reason you run for the exit, the only reason you do it is you try to front run Celsius needing to do it just so you could buy it back, right? Like if you know the peg is going to change. But this is just basically a trade to accumulate more ETH. Like my takeaway is, if this happens, I wouldn't be too pissed because I would just buy a fuck ton of STETH and then with the ETH that I plan on holding forever anyway, and then just redeem it for ETH, and it'd be a great trade for me, right?
Agreed.
That's how I'd take it. But if I am like borrowing against my STETH, yeah, I would be worried. If I'm holding STETH, then I can see how this causes people to get scared and maybe want to do a swap now so they can buy back later. But yeah, we should see some wildness happen. That's great. Well, not great for anyone, but you know what I mean.
Yeah, I mean, I think that's just somewhere some of my concerns are coming from. I wouldn't say like it's a given that it's going to happen, but I mean, when you look at them, like they're an asset management company for making crypto accessible to everybody. So what happens if a bunch of their
people want out,
clients here and they start pulling funds? I think that there's a decent chance we see a bank run on STETH, and I think you're 100% correct that
sets you up for
the best way to go about it is to have funds on the side and get ready to buy STETH because it is backed.
Yeah, if you're already exposed to ETH, like if you're already holding ETH exposure.
Yes.
Yeah, if we get 80 cents or 80, if we get 0.8 ETH per STETH or whatever that is, that'd be insane. I'd be down.
Yeah, I mean, and they're even borrowing. Like this was the wallet of Swissborg. Like we were able to find that, but they were borrowing some UST against it. So. I think the big question mark for me is, hey, what happens if there is a bunch of liquidations on Aave from STETH, and what happens if somebody forces Celsius hands to do that? Like I don't know what it looks like, but I think that it's a big opportunity, but it's also like things could get pretty scary pretty quick if.
Yeah. Okay, I have one more question for you.
Positions.
Yeah, one more question for you, and then we can move to the next thing. But I would just ask, does this impact the dollar value of ETH? Like.
Well, that's what I don't know if I've got that far because it's like, hey, like where do what happens with all the liquidations? If there's a way that Aave can get out of those positions, like maybe, but I don't know what that looks like. Like I really don't. So
yeah. But if people are borrowing ETH against the STETH and you get liquidated, they're just repaying ETH. So it kind of just feels like bouncing around ETH. I don't know if dollar gets affected unless it's like bunch of dollars are being redeemed and they have to sell that ETH to redeem those dollars.
Yeah, I mean, I don't know. I'm not sure. So like, I think that's a big question mark. If anybody has the answer, I'd love to know.
Challenge for the audience.
Yeah, challenge for the audience on that one of what happens on these liquidations because it's not super liquid. But I mean, I think the thing that scares me the most is Alameda running through the door, like selling 50K like that and taking like
they're probably trying to front run something.
Loss. Yeah. I mean, to me, it feels like we're gonna have a run on this by the weekend, but I can't guarantee that.
But
so
I'm ready.
Some small cap speculation. I mean,
Good
if
alpha,
you guys follow me,
ready.
you know how my threads go. It's very full of speculation. So I mean, something at least I've been keeping an eye on, and we'll see what happens with that. But I mean, make sure that you guys are keeping an eye on that because the market could get similar to UST Luna, it's not always the actual position that you need to be in or that you are in that affects like the entire market. Like if all of a sudden ST starts losing peg, like the problem is people have to sell other positions to like stop themselves from getting liquidated.
Yeah.
So it gets bad quick if people start offloading everything else across DeFi to make sure that they're not getting liquidated on like $1 billion of debt, $1 billion plus of debt in ST. So just something to keep an eye on. And I think there should be some very profitable trades if it does end up happening. So something to watch through the weekend.
Cool. All right. What should we do next? Let's do a DCF's RFV update.
Let's do it.
Let's do
I like that.
All right, cool. So, like I said at the beginning, most of what I'm focused on is finding plays that are just like oversold or valued wrong in my mind. So for me, that mostly comes down to like RFV plays. So looking for things where treasuries are worth more than the market cap of the token itself, and there's like a good road to redemption. So first one I'm going to talk through is Wonderland. So Wonderland's one that, you know, everyone's kind of, I've been tweeting a lot about and people have been watching because they did a redemption in the past. So it's very clear that they obviously believe their token is fairly backed. And now that it trades below backing again, the team or like the community put up this proposal for quarterly redemptions. So this happened a week ago, and voting is happening right now. But the idea is basically once a quarter, holders of WMemo will be able to redeem for underlying assets. And some stuff is liquid, so they'll get the liquid stuff paid, I think, in MIM or USDC. And the illiquid stuff, that's VC, they get up to 25% of. So if you do the math on like the liquid bits plus the illiquid bits, then you end up with like a final backing number. So I have the numbers. Well, first of all is the vote. So if this failed, then I think it'd be probably a pretty bad trade because it wouldn't be redeemable. So you'd just be buying, hoping that one day they do get back to backing or have some fair road back to backing. But here you can see that the vote is live right now, and like it's passing very heavily. So 127,000 time is voting yes for it, whereas 43K time is voting no, and it's like way past quorum. So all the details are in the snapshot, but I think this is clearly going to pass, and it ends in 4 days. So I don't see a world where this flips to no. If you look in Discord, sentiment is very happy and everyone's alongside, whereas in previous rage quits, sentiment was very negative. Like people are like, oh, our treasury is being raided. But I think holders now realize that it's important to protect backing, because when you have buyers come along, you want those buyers, when it's below backing, they're scared to buy because they think people will dump on them once they get to backing. And so when you do have new buyers, you kind of want them buying because they want the product itself, not because they want to arb the treasury. And to make that happen, you kind of want to be protecting backing. So I think they've realized that. Holders have realized that too, and they'll do a good job doing so. So this is essentially the same result as inverse bonds for Olympus.
How much is the 127? I think that's 127K.
Yeah.
Sorry.
Like
how much is that
USD?
worth in time? Like what size is that?
I think it's not a lot. I think it's something like $3 or $4 million worth. But it's way past quorum.
Loaded.
Yeah. So
Yeah,
people
yeah.
could show up and vote no, but I think like large holders are usually mostly incentivized to vote yes. And I think a lot of large holders don't even vote on this thing once it gets passing because there's no need to. But once the vote for redemption comes out, I think you'll see a lot more people taking part, because you're going to have to vote to whitelist yourself is how the process will work. So if you are holding WMemo and want to redeem, after this vote, there's going to be another vote, but that's not like a vote. That's more of a, should we whitelist you to redeem or not, right? And that's how that will work out. And we've done the math here. So I got these numbers from a friend, but essentially here's how the math looks. You can see like their assets that are risked on are like BTC, Matic, ETH, and a small amount of spells. So that's fine. And then their VC assets, basically just BSGG. So if you do the math for WMemo without BSGG, you get a backing of 36.5K, and you do the math of with BSGG, you get 38.2K. Obviously, these aren't these are like, you know, estimate numbers. This isn't actual math, actually from the team. Don't hold anyone to it. Yada yada yada. Not financial advice, but that's where we are, and it currently trades at 31K. Oh wow, there's actually just a huge scandal Wow, I wish I was. I wish I wasn't on the stream. I would have bought that and probably seen it. But there you go. That's at like 31K. So I think this is like for me, this is the kind of trade I look for because there are obviously sellers. Like all these candles kind of get sold into. There's obviously people that want liquidity now. Maybe they're being liquidated because the rest of crypto is going down. But it's a buy where I can say like within a month or within this when this redemption happens, I'm going to be able to claim the underlying assets. It's not guaranteed because there are risk on assets. So if like BTC, ETH, Matic all went to zero, then you'd be crushed. Well, not crushed, but you'd probably get. I think the number is something like 29K. So downside is really protected, and ETH has to literally go to zero for it to happen. Whereas upside is pretty strong. I think there's still like 20 or 30% upside, and that happens within a month, almost guaranteed. And there's like decent liquidity, like $5 million liquidity. So you can buy a good amount. And if you are buying like I'm doing, it's just DCA. Like I buy in small chunks and let people sell it off. But I think that's a healthy one. It's a good RFV one, and it's like at the end of the day, it is Danny, and he is doxxed, so I don't think he's gonna like rug or anything along those lines, or at least I hope he wouldn't.
Yeah.
So that's what I'm looking at there.
I mean, it seems like they've really de-risked their treasury as well. I think that was a big thing when I originally looked at this. They had so much AVAX. It was like 70 million AVAX.
Yeah.
And that was one of the things that always like I haven't looked at AVAX positions in the longest time because I knew that there was a massive position here in this treasury, but they offloaded it, as well as like Luna has had a massive AVAX position. So it's like people were rushing for the door, but I mean, it looks like they cleaned up their treasury a lot. So if you know you're getting the stables out of it and like ETH your only risk, like, I mean, well, it's not, I wouldn't even call it risk. It's RFE for a reason, but I mean, it's in a much better spot than like the last few times I've looked at it. So, I mean, it's a great refresher.
It's like, it's MIM, USDC, USDT, and I think they have a bunch of like MIM 3 curves, so they have a bunch of liquidity. Yeah, a bunch of MIM 3 curve. So I would say like there are other stables, but the main exposure is MIM. So one thing I do keep my eyes on here is the like MIM peg, MIM USDC, right? If I look at the pools, because like once this redemption happens, everyone's getting a bunch of MIM, and I imagine a lot of that MIM just comes to swap in the pool, right? And it's not actually so imbalanced. Like there's 85 mil of stables and 233 mil of MIM. So I think if they did a redemption, it would hold okay. But if you're worried about that, one way to like de-risk the MIM depeg, because MIM is fully backed from what I checked last. But one way to de-risk any sort of MIM depeg is just to like put up assets in Wonderland right now, or in Spell, mint MIM, sell that MIM for USDC while the peg is live, and then when the redemption happens, you're basically like kind of delta neutral on that MIM that you borrowed, right? So that's one way to de-risk that.
I don't know if you know. I actually don't. What MIM is backed by? Like you said, it was.
So one way to do it is just go to abracadabra.money. And then, I need to connect my MetaMask.
I haven't looked in a long time.
One sec. I'm just gonna.
You're good.
Open my MetaMask and connect so I can show you guys. Okay, so I connect my MetaMask. But I think you can. Oh, they changed the UI.
This is new.
Yeah, this is new. Damn. They used to have like a tool where I could borrow, and I could see like how much was borrowed on each of them. Maybe
I was pulling up their white papers, and I'm trying to take a look on. I'm sure they have it somewhere.
Yeah,
but
it's hard to show in this new UI, but it's basically backed by these assets. So it's a bunch of like people have minted MIM against ETH, people have minted MIM against 3 curve, people have minted MIM against WBTC, and stables in Stargate. So all of it is like real collateral that's like their biggest risk for collateral was the UST, and I think now that the UST debacle is over, and they made it out safe from there, there's no more shit collateral left in there. Like all of it's very healthy. So I'm not worried about the collateral. What I'm more worried about is just like how much liquidity there is, because they do that looping stuff. So there's often way more MIM than 3 curve, but right now it's really not bad. There's 85 mil 3 curve. So I think if people do sell it off, people just buy it back to repay their positions. Maybe you get a small depeg, but you can de-risk against that. And if there's like something like 20 or 30% upside in the W memo trade, then even if you lose 2% on the peg, like whatever, right?
Yeah, no, that's very true. Well, I mean, so I started doing some research into Abra, like, and the main thing that caught my eye. So this one I'll say is a half baked idea. So you guys will get it a little bit early, I would say. Is that like I started looking at Spell, like I was taking a look at like the new UI, and I actually got alerted from the CEO of the Umami that
Oh,
like
nice.
there
Carnation.
was
Or
I need to pull up the Twitter. I don't know. I have too many windows open at the moment, to be honest. But if you actually, if you have it up, like if you go to like the stake section and look at like M spell, like it's pretty compelling, at least in my opinion. So like if you do enough research here, like I think there's probably a pretty good trade to be had. So like M spell, like if you're staking it, it's just like M spell is just stake spell, but you're earning 33% or 33% APR, and that's really just off of like platform fees. But you're more
right.
exposed to the actual price of spell. But like the spell chart looks amazing. Like I looked at it. It really looks like it's about to break out. I believe they just made some changes on like dilution. Like I said, there's some like half-baked ideas here that I really need to pull together. Maybe for the next alpha call, we can do more of a deep dive.
Yeah.
But like, like when I look at a play like this, like I personally think that hey, if we're near a bottom of a market, like DeFi is probably one of the things that's going to bounce because people are going to be looking for yield on things like ETH and Bitcoin and stables. Like, but with that, like it's one of the things that I think will bounce once the market actually levels off and we're not just down only. But if you catch something like a spell, it's like 12 off or 12x, 14x, 12 or 14x off its all-time highs. But if you catch something like that, say you put 100K in, and all of a sudden you're back at all-time highs, that's now 1.2 million that you're earning 33% APR on. Like it's going to be pretty hard to just bottom ticket, but like staying on top of stuff like this that is paying you 33% APR in MIM, like all of a sudden you have a position that's paying you hundreds of thousands of dollars a year, just based off of
Okay, wait,
platform
hold on.
fees.
But like, if Spell did do a 10x, doesn't the yields on Spell go down because like the amount of fees that they're generating is fixed? It's not like if Spell
What do you
tripled,
mean?
if Spell triples, oh, I'm just talking out of my ass here, so I have no idea. But when I look at the Spell staking APR, I imagine this is like yields paid in what people are paying to Abra to borrow MIMs, right? So if there's like $1 million borrowed in MIM and it's earning 1% in fees, then $10,000 is getting paid to Spell stakers, right? And right now that would represent 33%. If the price of Spell doubles, right? So now the price of Spell is up, the fees that they're generating doesn't increase. The fees that they're generating is still the same. So now you're getting 10K against a doubled Spell price. So the staking
Yes, that
APR would
makes
then be
sense.
15%, right? So if you're at all-time highs, this basically goes to almost nothing. So the way I like to like think about these kind of trades that are like paying out their revenues is like what do I need to be paid in terms of revenues yearly? And do I believe that these revenues are sustainable, right? Like if you look at Web2 businesses, they usually trade at some multiple of earnings. So I assume this is something like earnings, and I'm getting paid a dividend on those earnings. And then I'm like, okay, what kind of multiples work in Web 2? And do I believe these businesses are as defensible as they are there? And then that's how you kind of price them. But with this spell trade, like I also get like kind of confused in DeFi where it's like, am I supposed to price things that way? Or when there's other stuff that is like priced at less than cash. Like if I look at a competitor to MIM, so something like Fei, right? Fei,
Yep.
you can look at their treasury and you can see that their treasury has like over $100 million in it, and it trades at just over $100 million, something like $100 million, and it trades at like $100 something million market cap, right? So it's like they're
Yeah.
priced at like not even like 2 or 3x cash, and that cash is for them to build the business. Whereas if you look at Spell, like how much cash do they have in their bank account? From what I saw last, like Danny never raised a round or anything like that, and he's trying to look to Wonderland to help fund Spell and do some sort of merger. So I think they have like less than $10 million in their bank account. So like, why would I buy a business with 10 million in its bank account when I can buy an equivalent business with like 100 million in its bank account? I guess the reason right now is because Spell has real revenues for its stakers, and maybe people want MIMS more than they want Phase. But will Phase be able to get these kind of revenues to holders? And if so, is that a better trade? or is this all just based on like marketing and narratives? I have
I
no
think
clue.
it kind of like I agree. Like it becomes very hard to value. Like I mean,
Yeah.
if you look at even like if we did some comparisons to the stock market last time of like you look at a company like Apple who has all this like like all this cash on hand, like people value that as like hey, like they have this massive treasury for like I think when markets do get bad. But it's very different on DeFi of hey, how much of that are we paying out to our actual holders, stakers, lockers, and how
Yeah.
much of that's actually going to be allocated to the team?
Yeah.
And I mean, like
Or
Jones
even
is
the
probably a good
business.
example of that. Yeah, like Jones is like they went like mainly stables in their treasury, but they're trading like almost 2.5x, I believe, under their treasury value. It's
Under?
all unstable under, yeah.
No
But like you
way.
don't have there's no way for you to access that. It's not like your money. So it's like, hey, are we just gonna bleed out against that? Like they said, hey, we can survive paying our entire team for the next like 3.5 years. And
Yeah.
like they're
Well, the
building
question
something
is, yeah.
great, but
The question is
it's
just
like
like,
when can we get our money out of it is what a lot of
right.
people see. So
Right.
I think that a lot of people, especially in like a market like
What
this,
the?
target
I didn't even
something
realize that.
where
That's so cheap.
I mean yeah, I know. I'm aware, but like exactly the point of hey, we're eventually gonna get a lot of our Jones holders like paid through VE Jones, where they'll be paid like 2 and 20, similar to like a VC. They get 2% of
Jeez.
like assets under management, 20% on performance of the vaults. But like they're kind of saying like, hey, that treasury, like it's great that we have it, but you shouldn't really be valuing Jones as a project directly based off of just treasury amount.
Okay, sure.
At
Okay,
least,
you don't have to value it as like a backed token, like Ohm
yeah,
or
exactly.
whatever, right? It's not a backed token. But like all you need to ask yourself is, can this team make more economic value than $1 for every dollar they have? The whole point of a business is to take dollars and make more dollars than you took in. So
Yep.
you're saying
Agreed.
like for right now, they can create 3x more economic value than the market is valuing them at by simply buying back their token to 1x cash, and it wouldn't impact any holders like dollars per token, right?
Yeah.
And they are actively deciding by building product we can create more than $1 of value or more than 30 cents of value for every dollar in our treasury, right? And if they believe that they can outperform that, then it should trade at more than 1x cash. And I think what's going to
Yeah.
happen is for good teams, they should try, right? Like, and holders should give them the opportunity to try. And you say like, okay, let's try for 6 months and let's see. And if we get to a point where it's like, okay, we've decided as holders and you've decided as a team that maybe markets are bad and it's not a time where we can create that much economic value, maybe the most healthy thing to do for our shareholders is to buy back this token or to give people a claim. But at the end of the day, it's like, here's cash for holders and the team to collectively decide how to deliver maximum value. And if that's delivering a product, sure. And if that's just simply doing buybacks, sure. But in the real world, companies buy back their stock when they trade too low all the time, right? Like Frax is even
Yep.
buying back their stuff and they don't trade below cash. Like, it's okay.
Yeah, I mean, I completely agree with you, and like, I mean, I think that's where a lot of people over rotate sometimes on treasury values when like
Yeah.
doing some of the actual calculations on earnings. And I mean, I actually spent a ton of time diving into like price versus earnings on projects, like I would say over the past like 3 weeks, and like that's one of the reasons I was looking at like Umami. Like they were trading way under their treasury value. They had like a great stable strategy, and I think another thing to consider is like which of these projects like are able to earn revenue in down markets. Like one of the reasons I love Jones is like they're actually a hedged ETH strategy. So if you deposit your ETH, they're earning like 8% like APY on that ETH, and even when you're actually like the market's going down, you're compounding your ETH. So I mean,
Wow.
like that's what they're doing for you. But like I mean, it's similar when you're discussing like if you're discussing like even MIM. Like I think they have a great story like upcoming for really their protocol. I mean, the reason I started looking into Spell was mainly because of the CRV whitelisting.
Right.
There was a proposal put together for that. So, like, what does the use of MIM suddenly become if, like, they start to, like, take a way bigger position and have way more influence in the Curve ecosystem? So it's like all of a sudden, does that lending revenue that they're paying out to M Spell stakers do a 5 to 10x? It might. I mean, so that's one of the things I was really considering, and like why it's somewhat a half-baked trade, but for some of you guys out there, if you want to front run me of being too busy to do my own research, like do your own research and you could probably figure something out there. Like I like took this chart that you have up and like was looking at the downtrend. Like they had a long-term downtrend and we're like in the process of breaking out of it. So like I was like, wow, this actually looks pretty good. And then taking a deeper dive that they're paying out 33% APR. Of course, it could do another 99% retrace and you end up screwed. But like I thought it looked pretty good at first glance, but need to do some more research there.
Okay. Before we move to the next one, one more question for you on Jones. When you say it's trading at 1/3 of its cash, do you mean FDV or just circulating cap?
Circulating. So that's a great point. So a great point. Like, and I think there's been a few of those lately where I've try and put together like yearly emissions of where will it be 6 months from now, 12 months from now, 2 years, 3 years, if it's still going. But that's how I've been breaking down a lot of my valuations. And
I think with plays like this, it's just about patience. It's like the most underrated skill in this whole game is just patience, right? Find stuff that's obviously undervalued. You can buy it. Take part in governance, join the Discord, have a say what you want, and just do whatever you can for your investment and just wait. That's what I like to do.
Completely agree. But I mean, I also think it's a different story when you're trading below backing. Like you do have emissions that are happening, but also if you're earning revenue as well.
Yeah,
like
they
it's
can
not
counteract
like just
those
that
emissions.
You're burning cash.
You
have to consider like how much is coming into the ecosystem as well. Yeah. So
is the treasury growing more than it's shrinking? Yeah, that's very important.
Exactly. Yeah. And I think some of these teams in DeFi are massive and like they're probably going to shrink for a while, their treasuries, because they're like overhired or aren't taking in nearly the revenues that they should while they build out their ecosystems. But like, I mean, some are already growing at a pretty nice clip. So those are the ones that I keep an eye on, at least personally, and like what I look for.
Sick. Cool. Okay, the next one I wanted to show people was Rome. So
I'm excited for this. I haven't looked at it.
Nice. Yeah.
It's been a really long time since I looked at Rome.
Let's bring up a chart first. So Rome was like the Moon River fork of Olympus, and it was advertised as a Olympus fork, a backed token. It was one of the hyped ones. I remember I bought it early, but I sold it as well around like whitelist time when things were hype. But when I go to the daily chart, you can see like obviously this thing was like $300, but like it's hard to look at this kind of chart with these rebasing tokens because obviously they're rebasing. So like who knows, like you could have 10x more Rome at this point than you had up at this point. So that's hard to look at, but overall it did sell off aggressively. And when it was at like $4, it was trading at like 1/3 of cash, right? And like we were saying before, you have to look at the difference between projects that say their treasury is for like funding the team, and those usually are longer term trades, and you have to say, can this team create more value than cash by paying them salaries or not? And you have to look at projects that have explicitly advertised themselves as a community owned treasury or a backed token. Rome started as a backed token and explicitly advertised itself as that, and now the question is just like, can it get back to backing or more? So I've been, I bought a little bit before, and then I bought a little bit later as well, because I've just been exploring that. But if you do the math on the backing for treasury, so let me just bring up this old article that they have posted. Here you can see that their net assets is in stables for 20.3 million, and this is just stablecoins, so it's not like Mover or like ETH or anything like that. So I can be sure that it can stay stable there. And then with risk on assets, the net is 22.8 million. And then if you look at like the current market cap is $10 million, right? And then the Rome in the treasury and the Rome in the LP wouldn't have claim to the underlying treasury. So in a worst case scenario, if they did distribute all the assets, I think it's something like $12 per Rome, and it traded at like 4 before. So this was like 3x upside. Today it's like 6. So there's still like a 2x upside just back to cash value. So then you start asking yourself like, okay, but are they going to burn all that cash? So then I looked at this article, and in their like State of Republic issue 7 that just came out, their spend is actually really healthy. So they talk through like the game they're building. It's going to be out in December. I think they've made some really good progress. If you go into the Discord, you can look at some trailers and things like that, like for chess and whatnot. But here in the in the budgeting section, they have a whole write-up that I would give a little read to, but they've only spent 700K so far, and they have 20 million, and they expect to send up to like 2.2 million to ship the entire game in December. So even if you assume the entire game gets shipped and all of that gets spent, there's still like 20 million bucks left, which is crazy, right? So
what's the majority of their spend on?
That's pretty good. So the majority of the spend is on game devs. But the cool thing is that they farm about 100K a month right now with the stable treasury, and they spend about 120K a month on 160K a month on expenses and people. So that means that they're only spending 60K a month net out of this 20 million, and they only need 2.2 to ship the game. So then my next question is, okay, that's great. So what do you do with the other 18 million? So I actually asked them. I just want to play this clip for everyone. Small cap, you won't be able to hear it. I'm sorry. But you can watch it after. It's just a quick clip, so I'm just gonna play that. Can I do this?
It's probably just a clip making fun of me. So.
Oh
I'll
yeah.
be the only one in the dark here.
Okay, I'll play it. 1 sec.
Currently, like 165K a month, and the rest of the treasury is used for farming. So I think our current spend after after yield is like 65K a month at the moment. Before we ran in the black, which is pretty good. But ultimately that treasury is 100% token holder owned. So however that capital wanted to be used or allocated or however by the community, right? That's just ultimately a token holder decision, right? It always has been, it always will be. It's always been a 1,000,000% transparent treasury that has always been token holder controlled. So,
yeah, so there you go. That's what I love to hear, small cap for you. He basically said that the treasury is completely token holder owned. There is no new dilution, which is great. It's like literally music to my ears, as Maddie said. And I was like, okay, so why hasn't there been like some sort of like backing proposal yet? And it's just because the historical proposals were all dog shit. Like if you look at them, they're so bad. They're barely written well. No one really got to vote for it. So that's why I'm looking at it. No, I do not think you should buy this one yet. Okay, I'm accumulating a little bit, but there's very, 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 very long. I think you have to wait for the game to ship. It's not going to be till December. So for me, I think the game looks pretty cool. I think their spend is good. I think cash is good, and so that's why I'm allocating to plays like this. I would say, do not buy my bags if that's something you're worried about. I will sell someday. So there's that. That's why I don't like really sharing this kind of alpha, but there's info here, and I think it's like it's kind of like just showing my mindset and how I look for stuff. So Rome, I think, is a good one. Wonderland's a good one. Temple, we've talked about a bunch, but I still have some concerns there. They haven't given any guarantees on, not guarantees, but they haven't even told us the metrics that they're looking for if they decide to protect backing or not. So there's that. I wouldn't say you're for sure going to get backing there. I think you have to actually want the products that they're building in the worst case. But do join the Discords and learn and make those decisions yourself.
Yeah, that's fair. How about I think Rome's definitely worth a look. How do you feel on GameFi in general? I'll ask you and then I'll give my thoughts.
So obviously it got out of hand, at some point. I think when people started saying getting into all the interoperability stuff, I think that was probably a reach. But I actually put a tweet up like this where I've been playing a lot of Horizon recently. It's one of my favorite games. You just run around and shoot off machine parts and make cool bows, and the graphics are great and things like that. And I do it and I relax and then I go to sleep and I think that was a lot of fun and I sleep nicely. But if I had to spend real money to buy parts and then buy a bow, and then I knew that bow had value, and then I was stressing oh fuck, a bunch of other people might also mint this bow, so then there's going to be supply issues, then I'm not going to be let me get that bow because I want to shoot this dinosaur. I'm going to be oh man, I should probably sell this bow and never use it to shoot that dinosaur, and it becomes a really stressful thing. So there is this downside that I realized in GameFi where it's as soon as something becomes work, you earn money from it, it sometimes stops becoming fun. Right? If it was my job if I loved cars and it suddenly became my job to do some car stuff, I think at some point I'd be like fucking sick of cars. And I would really hate for like games to be like ruined in that sense if we had to make everything about money. So that's kind of like how I'm feeling a little bit about GameFi right now. But on the other hand, I think like the free to play or like the things that crypto can empower within games in terms of creating positive feedback loops is wild, right? Like you can also make the games more fun, and you can also make them a little more like addicting, and you can make people willing to spend more time on it. And if you can get gamers paying people that are farming within the game for their items, then you've kind of created an economy which is pretty unique. But I still feel
Yeah.
like we haven't got like that game that's like, damn, this is the game, you know?
I agree. You pretty much nailed almost all of my thoughts there. I mean, that's where all the VC money is going. So I think what a lot of people discount with GameFi is it was never really a thing for this cycle. Like, sure, you had some plays like Treasure DAO or Magic, like Axie, and a few others, but like most like AAA games take like years to build. And I mean, like it's also teams of 50, 100 game developers and stacks of cash. So it's like the perfect place for VCs to go. But like in my opinion, I think that's where a lot of the Ponzi-nomics of DeFi from this cycle are going to end up, is in the GameFi space. I really feel like
That's what DFT
the ones
was, right? Basically just
well, yeah,
that's what
exactly.
DeFi was, yeah.
I actually did really well on that one. Like I was in like below, I want to say like $2, and I tweeted about it. So I mean that's actually public as a call, but I sold super early. Like I pretty much sold it like I want to say like 4 or 5 or something like that. And I think like it was a great like Ponzi-nomics because everyone wanted to like keep farming and like earn more, a higher percentage of the rewards instead of burning them. But like the second that those became liquid rewards, like everything crashed. Like when there was a secondary market to OTC them, like my OTC rewards were like, I went and looked like when I saw that came out, and I wasn't even early. Like it was probably a few weeks late when I found out it happened. And I think I OTC'd, I had a few $100K and just like rewards that were sitting there. Like, no, of course the price is going to crash.
Wow.
You're OTCing that much. But like the point being is like, I think there's a lot of resources going towards GameFi, and like everybody's bull case for it is like, hey, they think like third world countries, like there will be people who can play and earn more than like their average wages.
As long as people want to play the game and want to buy.
Exactly.
Like, if you can get Westerners to like, you know, this is kind of fucked up way to think about it, but I kind of think about it like precious metals, you know? There are people who are underpaid to mine precious metals, and then there are rich people in like America that are paying tons of money to buy those precious metals, right? And it's like one person is doing all the work to mine the thing, and then one person actually wants the precious metal and is going to pay for it, and that creates the economy. So if you can create that in some sort of game world where you have people that are doing work to mine some game items or somehow get those game items, they'll have value if rich people want them to flex them, right? And that's what happened with NFTs. People want NFTs to flex them. If someone had to do work to get that NFT, then maybe they'd be willing to sell it to the person that wanted it to flex it.
Yeah. I mean, I completely agree. But I think it's going to be the game that finds the balance between the two. As like Ponzi-nomics is able to build an economy and has a good game, is going to be the one that crushes it. But also,
For me,
like,
I'm hoping it's parallel.
What was that?
For me, I'm hoping it's parallel.
Yeah, I don't have any parallel positions.
Ooh.
A ton of people love it though. I mean, I missed the mint and then like never went back. So that's probably going to be the one it is, just because that's how things work for me. But
PD4 is right around the corner, and they're doing another mint. I think like they really screwed up the last mint. Like they oversupplied. There's too many packs. They realized people are buying them just to sell them. So I think this time they're trying to make sure like if you're buying a pack, it's going to be valuable. I obviously don't know, but like I feel like teams tend to overcompensate the other way. And they're very well funded. They have like basically infinite money, right? And Paradigm invested at like what, a $500 million cap or something like that, and it's like priced lower than that in Prime if you're buying a Prime key. I don't know if it's lower than that or equivalent to that, but another game that hopefully if it ships or once it ships, it's showing a lot of promise. Yeah,
I mean, I need to I would say reevaluate or re-deep dive that one because it's been a while since like I took like a hard look at it. But
okay.
I mean, like I honestly know a ton of great traders who have pretty large positions there. So like honestly, it's one I need to pay attention to and get out of my own head. But Remind me before the next mint comes around to make sure that I'm on top of it.
All right, I
Um,
got you.
I mean, like, I mean, kind of how I was saying earlier that like, I think there's going to be a nice DeFi bounce towards the bottom when the market levels off, and we think we found kind of the spot where we can trade sideways for a while, just because people are looking for yields. I feel like the biggest opportunity for GameFi is probably to kick off really the next up cycle. Just because like right now is probably the time that a bunch of us degens and like people with massive, like I want to say massive bags all through crypto, like they have time to play games and like get addicted to some game out there that they're going to invest time and money to. Like when you're in like peak euphoria, like there's no chance in hell you were going to catch me playing like just random games. But
it's
I mean,
hilarious because like often for these games to work, for like the circular economy to work, you kind of need people that are just buying the token, and then you also need people just farming the token. But if everyone's playing to farm the token and there's no buyers, like you're in this bearish market, the flywheel works the wrong way. So you kind of want both. Like you want the person that's just like, oh, I just want to buy the token, but I don't want to play the game, because it makes the number go up. So then more people do play the game to earn the token to sell on the people that are just buying it for the token. So in a way, the bull market's helped a lot of these games get users. But you're right. If you can make it work in a bear, like it's definitely going to work in a bull too.
Exactly. And so like, I mean, I think that's one of the things that I'm really going to be like keeping an eye on that I didn't really last cycle is like, I really think that there will be a GameFi game that helps kick off like a big full send for next cycle. So like, that's definitely one that I'm keeping an eye on. But we'll see how that goes. But like, as far as GameFi launches, like that's an area I'm going to be spending a decent amount of time, but
sweet.
How about like I know you were touching. Well, I was gonna say like I know you were touching on RFB plays. How about like any like stables that you're targeting, or any stable farms that you've really kept an eye on?
So I basically see RFB plays like stable farms, which is really cool, because what happens is you're basically buying a basket of stables for less than $1 each, and then when they redeem, you can just be like, what's the time to redeem and what was my yield over that period, right? But there are RFE plays that pay out. So one thing that I like about WMemo or Wonderland is that they have a BSGG farm. So you can also farm the BSGG at like 30% APR. It's like their non-native token. So while you're waiting for RFE to happen, you're also getting paid 30% APR on your basket of sub $1 stables, which is crazy, right? And that's like better yields than you would find anywhere else too. The other farm I like, which we talked about last time, was FPI's Frax and Convex. I think that's something like 10 to 15%, but that's great because you're half Frax and the other half is Frax that is yielding, that is growing at inflation rate. So it's like up only Frax / Frax LP paying out FXS, which you could sell if you want or hold at like 10 to 15%. So that's another good one. And then another one I like is, so if you see Temple as like Frax / sub RFE Frax, then Temple Frax LP is in the Frax gauge is pretty well bribed. So without any boost, it gets like 10%. But if you use something like Stacks or Convex, you can get like up to, I think, 30% on like stables / sub RFE stables LP. So those are the major stable farms I look at right now.
Yeah.
What about you?
That's very fair. I mean, like I haven't been doing as many of the RFE plays, but honestly, I need to probably pick your brain on, or just ask you for some of the breakdowns on them to run actual numbers. But I've been targeting a few things, and I would say from a stable perspective, I think one of the ones that I hear nonstop about, I actually tweeted about this week, is USDD. I don't know if you've looked at it at all, but I am just red flags everywhere on that one for me. Like it's literally the Tron or TRX backed like stable. It's pretty much built in the same manner that UST is, or UST was. It's not fully backed. I think it's at like $4 billion, but as far as like size wise, but it's claimed to have 200% backing when it really doesn't, because a lot of that position's burned and it's in like the TRX or whatever Tron's token is. I can't think off the top of my head. But like the full backing isn't there. And then I tweeted about it, and the best part was people coming out of the woodwork saying like, I trust it because of Justin Sun. And I was like, you guys really learned nothing from the whole Duquan situation. Like, the fact that you're sending me his tweets is like all just red flag after red flag. So I'm seeing a ton of people in that one, but I think everybody should be super careful there because it's advertised as like risk free. It's not fully backed, and there's going to be a point, maybe not in the next couple of weeks, but like where it becomes too big. And it's 1,000% going to end up being a target for like a big depegging, or somebody's going to go out and really try and crush that from a balance standpoint. And I think what a lot of people discount too is like if you're a big fund or you're a VC or you're even like, I don't know, Alameda or like some of this like so even centralized exchanges, like the ways that they make money in the bear market is finding ways to liquidate people. And like those are like just low hanging fruit, like situations like that. And I think we saw it with Luna. I think STETH is another one that's on my radar and we discussed, but like also like the USDD stuff, as soon as somebody sees an opportunity to take that under, like they will 1,000% target it. And I think we've seen Justin Sun almost get liquidated in the past or within a very close amount. I think the rumor was that he slept with someone's wife. I think that was all over like
that was
I
don't know if that was a joke, but people were like,
yeah,
"Oh, BTC's dumping because Justin Sun slept with someone's wife." That's hilarious.
But I mean, just wanted to highlight that one as probably one not the like I wouldn't ape into and be very wary of that one because a lot of people have been discussing it as like their stable play. Like that isn't a sit it and forget it, and also don't overinvest in it. But that's one I would target to like keep an eye on because like if something does start happening with it, you want to make sure that you're not like overexposed to other positions that'll be affected as well. So something to keep an eye on. One I really do like though is like we talked about a little bit was the PUSD from JPEG.
Yeah.
Spent a lot of time like diving into it, and like I mean the yields are pretty insane. I mean just because it's backed by like I mean Tetranode is really one of the founders. So when you talk about how his CVX positions, I mean between him, JPEG, DopeX, I think he has multiple million CVX, so he can really incentivize a lot of those yields. But it's paying pretty hefty amounts. Like I want to say it's at 33% right now. I can try
what's the peg look like right now on PUSD USD?
It's a little bit over the last I checked. I was gonna share my screen. Will you pull up that curve pool?
Is it a factory pool?
I don't know if I was actually in Convex. Yes, it's in
there.
I
found it. Yeah.
Yeah.
Oh, it's not bad at all.
No, so like what's actually going on right now? I need to pull up the Twitch. I have too many windows open now. I messed it up, but like so it was like I want to say like 102 or 103 per like one USDC. But what was happening is a lot of people were just depositing in that pool with like 3 CRV, and it was becoming super imbalanced. So part of the issue was like a lot of people were just coming in and stealing yield, like.
Well, I guess they're not stealing yield. Like what they want is they want people to mint PUSD, right? And if people can just swap for PUSD, then they're disincentivized for minting. So I think what they're trying to do is they're trying to change the A factor so the slippage is higher. So even if I want like 100K of PUSD, I'm gonna have to pay 2% to the pool, right? And then anyone that can come along mint PUSD and sell it and get a free 2%, which gives you incentives to mint PUSD. And that's a cool like DeFi way to get users, right? But I actually don't hold any punks, or I think it's only mintable against punks right now, right? So
no, they just did rocks and Bored Apes. The Bored Apes and Mutant Apes are. I'm pretty sure they're live.
Okay, Apes will be good. But yeah, I'm gonna ask Tetranode to try to make Anata's mintable. That would be sick, but I think it's a stretch. I think they're looking for.
I don't have any either.
Expensive ones.
But like what I did is I waited, like I kept checking that actual ratio, like the exchange rate that you're looking at there, and like waited till it was low enough, and then like I ate a decent amount into this pool, so I got in super cheap, and then like he's raising the A factor over time. He's pretty much saying like, hey, we're gonna screw the 3 CRV users over and get this pool to like a healthy ratio of like 60-40. So like by doing that, like it's probably going to depeg further if you raise the A factor.
It's already 60-40. You want it 60-40 the other way?
Like 40% PUSD, 60% like 3 CRV. But like if you mess with the A factor, like it starts to be depeg sooner. Like for example,
Yeah.
like
It's
on
already
a very high TVL like STETH, like if you have a high A factor for the amount of TVL, which they do, it barely loses peg. Like it's what 3% off peg, but very unbalanced. Like he's changing the A factor in a way that like it'll unbalance extremely quickly, but it'll be able to take I would say it'll be on a much deeper curve. So like if you're at like maybe 70-30, it might be depegged by like 5 or 7%. And it's still healthy, but like that's how you can actually mess with the A factor. But because of that, like I figured, hey, if I can get in near like 1% or under of a fee to really enter PUSD, then I have the upside not only of 30% plus yields in convex, but like also I could have a good chance of exiting when this pool like PUSD is now like I don't know 5% over. Like I can just swap it back out to USDC. So like, I
trading
think there's a
stables
good
like they're shit coins. That's hilarious.
that's
I
exactly what
love
I'm
it.
doing.
Only
So
Tetranode would make this kind of stuff happen. That's wild.
I like
That's wild.
it, but I'm like, I mean, so I'm in a similar. I'm just kind of shocked you don't have any punks or apes or any of that. But like, it's also like a good opportunity if you're trying to buy some of that stuff in a bear market. Like, if you think like, hey, we're about to bottom and ETH's gonna like stay pretty stagnant, and like apes and crypto punks are gonna hold their value. Like, you can buy like an ape, deposit in JPEG, like mint PUSD against it, and if it's 5% over peg, you
Yeah, you
pretty
just
much get
sell
a
it and get
5%
5% for free.
discount.
Yeah.
Yeah. So
Yeah.
like you can get a discount buying into some of these
I
NFT
think that's the
projects if
hack,
you do it
right?
the right way.
It's like get
Yeah.
stable farmers to buy PUSD so that they can farm at 30% in convex. They have to trust that this is going to stay long, right? Like 5% is actually a lot. If you think about it, this is 30% over a year, right? So something like 3% a month. So it's like you have to give a month's worth of yield if you think it's going to come back to peg and you won't be able to sell it for 1.05 again. So I don't know how many people are going to buy it that high. But maybe at like 1.01, like of course you would, right? It's probably less than a week of yield. But yeah, this is a
Yeah.
very healthy pool, a very good pool, paid in convex and curve. If you're bullish on those, you can hold them. If you're not, you can just sell them as you go. That's totally fine. And if it's above and you have NFTs, then like help keep the peg and get some profits. I think it's a cool growth strategy for sure.
Yeah. And I think but like probably that's probably is on the high end, like 5% over peg. Like I think you're probably right there.
Yeah.
But I also think sometimes people don't really pay attention when they're just aping into some of these pools.
Well, that's yeah, not me, but that's crazy.
Yeah.
Um,
Yeah, but like you can set notifications for yourself and stuff like that too, based off of it. Of hey, if this ever hits this level, like
Yeah.
I want a notification, so that can be your exit strategy too, and help arb it back. But
Yeah.
something to keep an eye on there. But I mean, I like that from a yield perspective, and I think like the way I'm looking at it is probably different than most of like convex CRV. Like I am bullish on those long term. So like I'm just gonna stack rewards. I'm probably gonna lock most of them. Do I think we're at the bottom? No, I don't. But like everything I'm really earning on a lot of those staples, like I'm trying to do it in projects that are also gonna earn me yield long term. Like I'd love just a steady stream of income.
Yeah.
And if I have to lock my rewards to do that, that's probably protecting me from myself in some situations. But I think stacking rewards now, like if you're getting 30% in, like it's a similar example to earlier, if you're getting 30% rewards now and CR or CVX is like $7, if it goes back to like $40, like I mean that yield that you were technically getting in the entire bear of 30% on PUSD was, I mean, what, another 6x higher. So you're technically getting like 180% APR on your stables if like you hold them till that point and sell. So
it's like a huge
that's kind
stretch
of
to think
how
it'll
I
go
look at
back
it.
though, like to $40 from here. Especially because like emissions are higher now. I think people
I
are more
agree.
scared of the
It's just an
market.
example.
But yeah. And
Like,
there's a huge
yeah.
unlocking coming. So I think people are scared of buying convex right now. And also a lot of people
Oh,
are short
yeah.
convex in FTX. But if that unlocking happens, everyone just relocks. I think a lot of those shorts have to close. So there's definitely a trade there.
Yeah, and I mean, I'm just on the unlocking too. Like I am bearish through that. Just I believe that there's a pretty decent sized position that like
Needs to
Luna
sell.
owns still as well.
Oh,
Yeah, so
right.
they're
Yeah,
not
they're
an
gonna have to sell
unlocking.
that.
So
Right.
like there's definitely, like, you can say bullish unlock so many times, but like there's people who definitely need to sell, definitely need the liquidity. Like I just don't necessarily see it this time. But like,
Yeah.
I mean, I still hold my convex position and I'm still going to keep stacking, but something to keep an eye on.
For sure. Okay.
Um,
We are like way over time. It's like an hour 15.
yeah, yeah, I wasn't paying attention to the
No
clock.
worries. Let's do a quick. I'd love to. I had a video. Well, I actually have a surprise for you. One thing is we're making you an Anata honorary. So there you go.
Oh,
Let's go.
I love
Uh,
that.
so we'll have a little small cap bro on here. Hopefully next episode or the
You a
episode after.
scientist?
Yeah, a little scientist bro. So that'll be sick. And then the other thing I wanted to touch on was we made a little video that I wanted to debut on this stream. So mind if I debut that video?
Yeah, let's do
Sweet.
it.
I'm just gonna hit play on it. You won't be able to hear the audio either, so just
That's all
listen
right.
on the
That's all
stream.
good.
But it's about 2
Yep.
minutes. Okay, ready? I'm playing the video.
Good morning and welcome to the Anata Academy. My name's Weifu. Nice to meet you, and I'll be your instructor today. In today's video, I'd like to tell you a little bit about Anata. Anata is a brand new form of identity for Web3 and beyond. It's the first PFP you can literally be. Anata uses your webcam or phone camera to mimic your movements exactly. When you speak, your Anata speaks. When you blink, your Anata blinks. Move your head back and forth, raise your eyebrows, squint your eyes. It's all reflected immediately by your Anata's avatar. We see Anata as the natural evolution of the PFP. Owning an Anata allows the holder to express their Web3 identity beyond the normal static profile picture by actively wearing it and animating it with its own unique movements, habits, and body language. We believe holders will find endless places to use their Anata: work meetings, community calls, TikToks, gaming streams, vlogs, and anything else you can create or join with a computer and a webcam. We think the biggest use case of PFPs is in self-expression, and video mediums are often the most expressive of all. 2,000 Anatas live in the original collection on the Ethereum blockchain. Owning one gives you access to the currently released assets for your Anata. Holders will receive airdrops that will allow them to further expand their Anata's reach and branding potential. Airdrops include items such as artwork, streaming assets, and more avatars in different formats. We also created a 4,000 ETH treasury during mint. By holding an Anata, you have the ability to vote in our DAO on how the funds get used to best support the community. Anata's goal is truly to allow you to express your Web3 identity however you please. Alright, that's all I got for today. Thanks for coming by. I hope this video was able to help you. And if you have any questions, feel free to drop by our Discord. You have thousands of brothers and sisters waiting to meet you. And I'll see you in the next lesson. Later.
All right, we are back. Hey everyone. Hope you like that
Still
video.
watching it.
Oh, you're still watching it? Oh, on the stream.
No, it's all good. I just muted it. Like, because we're so far ahead
Oh,
of the
yeah.
actual stream. It's all good. I'll watch it after.
Let's cover the last 2 topics. You want to talk about some Bitcoin stuff?
Yeah. So couple like only 2 things I have left on my list were, like, would love to pick your brain if you have any of like plays around Bitcoin. So I mean, touched on it when we like opened the stream. Like ETH Bitcoin, like chart looks pretty awful. Bitcoin dominance is like pumping. Like, is there anything out there that like it's been a long time since we've been in just like a Bitcoin dominant market. So is there anything that you target like during those times, or like any kind of plays where you go Bitcoin specific? Curious to, like, what your strategy is.
Look, like I said before, I'm not really like a chart trader. I got in crypto in 2013, so Bitcoin's the thing that brought me here. And I spent a lot of time just like holding a bunch of Bitcoin. But it was actually this cycle that I swapped all my Bitcoin to Ethereum. I just think like the narrative is strong for Bitcoin, but after the merge, the Ethereum narrative just gets so much better. It's like everything Bitcoin is, but it's also like environmentally safer, and holders kind of get paid for holding instead of getting diluted by miners, which is amazing, right? And then I think that Bitcoin, if you look at like network fees, if you look at like crypto fees on Info or something like that, and just compare them to Ethereum network fees, Bitcoin literally doesn't have enough fees to sustain the network as more and more halvenings happen, right? So they're going to keep having the emissions to miners, and at some point in the future, what's going to happen is there's not going to be enough emissions to miners to cover their costs unless the fees spent on the network go high enough. And right now, the fees are certainly not going to be high enough to continue to pay miners to continue to run the network. So I think Ethereum is just like a far better asset because it'll be able to run just based on fees alone. So I was a big Bitcoin maxi. I started as Bitcoin maxi. I still like obviously have like believe in Bitcoin, but I currently don't hold any. As a trader, if I was looking at like inflation resistance and like where's the narrative and all that stuff, yes, Bitcoin dominance is going up. More people are swapping for Bitcoin. It's like probably the least volatile, probably the most safest asset. But like I'm like a eat this money maxi, so like I'm probably a bad person to ask. If I'm
That's
like
fair.
in Bitcoin ecosystem? But if I was trading Bitcoin right now, I would be looking at GBTC, just like outside of crypto totally, because it's like what 30% off Bitcoin prices. So if I'm just gonna long term hold Bitcoin anyway, it kind of feels just like a
RFP.
STETH DPEG, you know? Yeah, buy some
Yeah.
GBTC and wait until it becomes an
Yeah.
ETF or whatever that is, or look at Badger ecosystem because I know Badger is like all about Bitcoin on Ethereum.
Yeah, I mean that's great points. I mean, you're always going for the how can I get the most out of my dollar? I mean, GBTC is something I targeted, but I think I'm going to start looking into some of the Bitcoin plays a little bit heavier here over the next couple of weeks, just based off of everything that's going
I'm
on
curious what you think
in the
about Stacks.
ecosystem.
Oh, not Stacks. What's it
I
called?
don't like it. I mean, yeah, stacks like
It's
so.
like a
I
layer two on
actually
Bitcoin or smart contracts on Bitcoin or something like that.
it's so painful to use
Oh
though.
wow. Okay.
I actually played I mean, of course, like I'm everywhere. DCF. I played Arcadica. I think it's called Arcadico. I actually still have funds over there, which was like the first DeFi platform on Stacks. And I mean, it got exploited like a weekend. Like the oracles are very tough. Like it's something they're still working on, but I think like Stacks struggles because like they chose to use like Stacks or as gas. So like a lot of Bitcoin maxis don't really like it. It's like, why didn't you just use Bitcoin as gas? And like it makes the network struggle, I want to say from an adoption standpoint, but also like it's just such a slow network compared to like anything else out there. Like even like the worst like EVMs and like, I mean, so I'm not super bullish on that piece, but I mean, like, I do try and find other ways to get yield on like a major narrative out there. So if I think like Bitcoin's going to outperform ETH, then like I try and go find small caps or like ways that I can earn yield on Bitcoin where it'll outperform the rest of the market. So, I mean, like Chess, it's like a BSC project that is like has been like pegged to BTC. Like I know a lot of people use that one last time around. Haven't looked at it in a really long time. Like Badger could be an example of that. So like I'd try and go out and target some of those protocols and probably where I'll spend a decent amount of time in the next couple weeks. But
Damn.
I was curious if you had anything there. But you're ETH Maxi, I get it. Good to know. But that's about it on my list. The only other thing I thought was worth targeting or having a quick conversation was I listened to an amazing Spaces the other day. There's like a ton of people down super bad in the market. Like I said, I'm kind of very bearish where we sit today. So like listen to it's actually Therapy with Gainsey. Like Gainsey
like
is
Gainsey.
the person behind it. Yeah, I mean he made a new Twitter account. It's called like Therapy with Gainsey, and they've been pulling in like vetting some guests and having them talk through their experience, like how they lost money, like how it affected them mentally, and like what their go forwards are. So like I mean, there's anything from like people who like came in like 2 cycles ago to just came in to lost 50K to 20 million, like, and people kind of talk through their experiences, but like highly recommend like listening to it. And like I mean I've gotten so much out of a few of those sessions that like if any of you are down bad or like just want to kind of learn from some of like the vets or other people's mistakes, like that's an amazing like Spaces to like follow the Twitter account, like Therapy with Gainsey, follow Gainsey. And like I mean even just it kind of is, but like I mean even listening to like Flood, like he said like he lost like 20 million over the past few months.
Jesus.
And it's like damn. And like he's like, honestly, I'm not in front of a screen though. I'm like at a gym right now, like trying to find ways to get outside, do different things, like make myself better. There's people like struggling like in other areas. So like, make sure you're all taking care of yourselves, I would say. And like, I
And
would
if you're gonna
tune
lose
in for
20
sure.
million, make sure you pay your taxes because that could put you in a really bad place.
Yeah, that's it. I mean, I've talked to some very good traders who really put themselves in a very bad spot because of the UST debacle. So like, I know a few people personally that are in that situation. So like, it's a good way to look out and like make sure like, what not to do, and just kind of learn from other mistakes. But that's about it. We got through all of my notes. That's probably why we're way over.
Yeah, that's okay. I still had two more, but I'll let them be exercise. We can cover them another time. But for people that just want to look them up, I would take a look at Spice DAO, because the Frank Miller is doing an NFT drop, and supposedly it's gonna be free for all Spice DAO holders. And I see Frank Miller as like one of the best comic book artists in the world, right? So if we get anything that like Murakami triggered for the Clone X's, but via Frank Miller's brand, then I feel like that could be like a good fit. And it trades below its treasury value, so I feel like buying it and then getting the Frank Miller NFT for free is like a pretty good bet. So that's one I like. And then another one was just PDT. They recently put up stats on their treasury. There's actually a decent amount of cash in there, and it looks like they're going to get the biggest airdrop of Prime. So I feel like it could be a better bet than even Prime keys to get free Prime almost. So there's some math there to be done. We can walk through it on another call.
Yeah. It's fair. We'll make sure we set some time aside next week.
Cool.
Spoiler for those of you who are still hanging around. I know there's only like 40, but we'll have Sammy from Redacted on Tuesday at, I believe it's 3 p.m. Pacific that we have on the schedule with him. And I think maybe later in the week, next week, we'll probably do another alpha call similar to this, but we'll see.
We'll be flapping. Thanks, guys.
Thanks, everyone.
Bye.
Bye.